Welcome back to my channel. I'm Patricia Saylor, Managing Partner of Saylor Financial Fundamentals. This week's QQQ trade update is pretty interesting. I have a $2,000 negative number in my account, and I'm fine, even really happy about it. I'll explain why. And to keep the wildlife theme going, I'm going to show a snippet of my favorite bird on Oak Island, North Carolina. Great Egret Stella rehabbed at our local bird hospital in 2013, and even though she has been released to the marsh behind our house, she returns to Seabiscuit Wildlife every day, where the people are friendly and the fish are free. Let's take a look at the numbers and see how this trade is playing out. QQQ is trading at $536.93 a share right now, and I have a $515 call expiring deep in the money. So I'm looking over here. It looks like I have almost a $2,200 deficit in the account, and that looks pretty bad. So I did an assessment this morning to see where things actually stand. And I went back through and added up, as I often do, all of my profit and loss on this position since I opened it on May 16th. My total expense and income on these QQQ trades since last May is $54,056.31. And I divided that by the 128 shares that I own. My average investment per share right now is $422.31 when adjusted for all of the income that I've brought in through the options and some capital gains from selling shares. But I wanted to see what has been my total options premium and my total capital gains. I've brought in almost $8,000 in options premium. And so that total $54,056 means I have spent $61,884 on the shares themselves, and that's offset by $7,827 in options premium. When I come back over here and I look at this covered call with a strike price of $5.15 and know that if I let those shares go, I'm sacrificing a couple of $1,000s in opportunity cost on the share price, that doesn't bother me at all because I've made almost $8,000 by selling these options. So I hope that makes sense to you, but I wanted to just say that up front as we go into today's trade and update this position. All right, while we let this QQQ trade develop, I want to share something that could really help you understand these strategies. If you want to trade low-risk options confidently, this week I just published Book 2 of my Novice Investor's Guide series, Beginner's Guide to Safe Options Trading. It covers cash-secured puts and covered calls, exactly what I'm trading here. How to set them up, manage risk, maximize income, roll them when necessary, and keep track of your trades. The options trading book is part of a 3-book series. Book 1 lays the foundation for stock market investing, and Book 3 dives into bull put spreads, which are not for everyone, but if you're going to trade them, I help you do it with your eyes wide open. You can grab whichever books you need on Amazon. Links are in the description. And if you've already picked one up, please write a review. They are newly published and don't have any reviews yet. So writing an honest review really helps Amazon know whether my books are worth moving up in the search results and will help other investors know if they want to choose them. My first goal will be to see if I can increase the strike of this $515 call so that if I decide to let these shares be called away from me later, I'll gain more in capital appreciation. And then once I do that, I'll go back and look at this put and raise the strike price a little bit to be able to generate more income with the put. First, I'm going to look at the options chain to see how far out I need to go to raise the strike price of this call. I'm going to look at rolling to either February 21st, which is 7 days from today, or rolling out 14 days to February 28th. And my goal is to increase the strike price and generate some kind of net credit. Closing the call today is going to cost me about $2,200. I'm going to look at the next 2 Fridays and see what I can do to find a strike price above 515 with a premium above 2200. It looks like the February 21st expiration will not allow me to increase the strike price, so I'm going to look out at February 28th. On February 28th, I can generate a net credit rolling to either 516 or 517. And since my priority is raising the strike price right now, I'm going to try to roll out to 517 for any net credit at all. I see that keeping the same strike price of 515 could bring me between $212 and $242. Raising it to 516 would bring me maybe $130 or $150 plus another $100 of capital gains. At 517, I can bring in between $35 and $62 and increase my capital gains by $2 a share. And at 518, I would not be able to generate a net credit. The roll filled at 61 cents a share, so I'll be adding $59 and some change to my cash balance. And now let's look at rolling the $510 put out 1 week and raising the strike price a little bit to try to generate a credit. I never like to roll my put strike out higher than my call, so I'm going to keep the same strike for my put and my call. And the call will be pretty deep in the money, but the put is still pretty far out of the money. With a strike price of 517, I can generate about $45. And there it filled at 42 cents a share. So I'll be adding $40.58 to my cash balance. I didn't generate a lot of premium this week, but I have set up the position for better rolls next week, I hope.
Yeah, why don't you talk?